Hi, everybody. This is Gary Dean, and this is our nightly video report for Wednesday, May 17th, 2017. So again, I apologize for missing the morning notes as well as last night's video report. I had my mother-in-law's funeral services, so we're all done with that. I'm all cried out. Have nothing else I can really go through on that. But anyway, it's a it, I came back to see the markets getting absolutely slaughtered today, and the thing is that it's nice to see when things fit a pattern. Now, things are not always going to fit a pattern perfectly, but these actually did because we were looking for the turn dates to come on the 10th and the 15th. Those are the dates Woody had mentioned going all the way back to April 27th. And I'm showing you this because this is what it was here was that he was saying he's looking for a trading high between 510 515 were the two dates. So it was everything fit with this. Now, did it go perfectly? Absolutely not, because I would have loved to have been long for this, but I missed it. And it's not going to be the first opportunity that I missed, and it's not going to be the last. But the thing is, once it made these huge gap ups, I had to make a decision on, okay, I knew we didn't have the turn dates coming for, almost another 2 to 3 weeks. Did I want to jump long? And where we were in the wave, the way that the wave structure was set up, I had no desire to do it because it just the way that it left the door open for a larger pullback. So I just sat aside and every one of my video reports and every one of the morning notes from these things, I was saying, wait for, to get aggressive. Just kind of, if you want to trade, you can trade the channels or the ranges we're in, but don't look for any kind of swing trade until we start nearing the potential turn dates. So we were here, and this was at the 2398. It took almost 3 weeks to make the top, and the top was literally 7 points higher than here. So I didn't not jumping long was not a mistake. Missing this move was a mistake. It would have been great to be in it, but I just missed it. So not taking the long trade just saved me stress because it was just chop up and down. And on the 10th, what we were looking for, this is the first turn date, and the way that it was labeled, it wasn't looking for that massive, massive drop yet. And the reason why was we had our 1, 2, and then the way that I was showing it, you have 1, 2, 3, 4, 5, and I had to leave the door open that this was just a wave three, 1, 2, 3, and we were going to come down, make a wave four, and come back up and make new highs. And from there, that was going to give us the massive bearish divergences and also set up the pattern for a potential larger drop. So the 515 was the other date, and sure enough, this was just a four. We came up, and all we had to do was wait for this pattern to fill out 5 waves. And if it made a new high, this was going to be stamped your wave five. And if you remember, this is the exact pattern that I've been showing, is that once this five is made, there's going to be a large drop, and it could come all the way down to this 2316 and then come back up again. Now, the risk is it's not going to bounce and we're going to continue down. So even if we come down here, I'd probably get a little, say, less, maybe, throw some stops on shorts if it gets all the way down here. And if it drops through it, then wait for a bounce and then short it again. But the thing is that the pattern's saying, hey, we may find support somewhere in this area and we may bounce up. And if we start seeing bullish divergences, we want to look long. But what we really want to do is concentrate on when the turn date is going to be for the low. You don't want to be, buying the dip right now because remember what Woody was saying, and it's in this, the reports, and you just have to go back and look. And he's looking for the, this could be followed by a good decline and then followed by further upside. So I'm removing these dates because I'm actually going to send this out to free members as well. But the thing is this, is that we're not, this isn't just taking guesses. We know what sentiment is at. We know what Woody's his turn dates are, and I'm just trying to draw patterns that are following it. And this one worked out perfect because there was no pressing the short side here. Is wait till we make this fifth, and then the expectation is we're going to get a move all the way down here. So nobody that's been reading our reports or listening to the videos or reading the morning notes should have been long up here. If anything, I was saying to build a short position, leave the door open for a move to 24.12, but time is out for the bulls and you want to look to short. Well, today was a pretty good move down, and like I said, it opens the door for this move all the way down to the 23.21. And the thing is that a wave, if we're just coming down and making a wave four, then we really could go all the way down to this level here because this is just a 23% retracement. So from here, that's 22.55. So again, if you got short up here at the near the 2400, then this is a fantastic trade, and this is all we look for, these moves. And then when it gets here, and if there's a turn date that's coming, which we're going to let Woody tell us tomorrow, because it's going to be really, really important, because everybody's going to be bearish on this market and it may continue down. But what I will be looking for, are we getting some bullish divergences on the daily, on the 60-minute charts? And if we get down to these levels and we have bullish divergences and we're running into a possible turn date to the upside, I'll say, you know what? Run with a half a position on the short side, because you just made a fortune on this move here. And then just, if it continues down, then what you do is you just wait for a bounce and you add to that short position. But if you're here and you take some of your position off and then it bounces and you have a stop, and then your cash going into this wave five, you could either trade the long side, which I probably won't, because we're still setting up for even a larger drop to the downside. And I will just wait for it to get up here, wait for Woody's next turn date and short it and map it out the same way I did with this. And that's really it. So we're not guessing anything. We're not relying just on Elliott Wave, because it's impossible I think it's impossible to do Elliott Wave if you don't know when to expect the turns. And what I mean by that, we knew we had the 10th and the 15th. So these five waves, it meant a lot, because it was falling into our time period. We had the bearish divergences on the 60-minute chart. We had five waves up, and we ran right into where the pattern is looking for a move down. So it's just being able to take each part of our service, the sentiment, the technical turn dates that Woody gives, and then patterns and wave counts to draw a picture that you guys can trade off of. And like I said, this one went perfect. They're not all going to be perfect. Some things are going to be extended, but this one worked out great. And hopefully we're going to get these volatility is going to pick up. And when that does, you're able to trade both sides, the upside and the downside. So I want to go back to this real quick, because remember, this was all done on April 27th. So what Woody was looking for was the golden halo, which is more good news, upward churn, and what happens is the market just turns and nobody really understands it, and that's the golden halo. So we were like I said, he was looking for the potential low to come in April. That came. Then we were looking for a potential high to come on May 5th, and May 15th. And then it's just going to be followed by, it's going to be a nice decline followed by a possible move up. And so we want to keep an eye on when Woody tells us when the low date is coming in, because like I said, you may want to, if anything, if we find a low and it's at support and we have bullish divergences, you may want to take a long shot, a long trade, because if that's the case, we're taking out these highs. Now, there's no guarantee that that's going to happen, and that's not what I'm recommending. I'm just saying you want to leave that door open, because if we have the drop that we was expecting happen and then a push up, you don't want to be short, especially if you got short up here, when if we're going to come all the way back up to these levels, which the pattern's saying there's a chance on it. So right now I'm leaving. I still think that with this move can come all the way down to these lows, or possibly lower down to the 2264. We don't have any bullish divergences in place. So my guess is we're probably going to come down, or we could even open up a little bit. But what's going to happen is we're going to get some kind of bullish divergence, whether it be at the 23.40, the 23.28, or lower than that. We have to wait and see. But my point is this, is that once we get those, that's when you want to start lightening up on your short position, because you don't want to be caught on one of these massive short squeezes, because all of your profits on the downside can get wiped out in 2 days when the market's not even trading, because these are on gap ups, and you can't get out of your positions. So I would not be looking to buy right now. I would wait and see if some of these support levels hold, and then wait for a bounce. And if they give you a bounce back up to the 23.79, hey, take it to short and then come down, but that will probably give us that bullish divergence. So you don't want to get aggressively, shorting on that position. So that's not, I don't really have a whole lot to go over. If we get a bounce, you can see the congestion is the 50% retracement. That's at 2380. We have 2367, which is a moving average, a pivot, as well as the 2367 resistance here. But here's the thing. We have 1, 2, 3, 4, 5. We have some bullish divergences, so you leave the door open for some type of bounce, and that's it. And you rinse and repeat. Just know that we're looking at the bigger trend right now, short term, is to the downside. Bounces could be shorted until we come to the expected turn date, and then from there you leave the door open for a possible rally. You may be able to go long or just cover your short positions and then wait to short on the bounce. So with that, have a great night, and I'll talk to you guys tomorrow.